Good morning, everybody.
Good
Uh,
morning.
Welcome to today's live stream. Today I'm here with a cat with charts and a bit of a special live stream because today we're going to be doing an autopsy on the failed trade call last week. So hopefully we should answer any questions or doubts you might have had because it was certainly a rough week and we want to talk about it, right? Since we don't often make mistakes, but we are human, and we certainly did make a mistake. So, even though we did call the bottom for Bitcoin, we took profit way too early by thinking we should short at the 50 MA. And today we're going to analyze why we were wrong. So, Kat, let's dive right into it. Let me make sure we're actually live. We're live, I know it, but sometimes beautiful. Okay, friends. Kat, you linked me a chart. I'm gonna see what you sent me. All right, tell me what's happening here.
So, this is what you get roughly if you load up the cat indicators. And I've also turned on the setting to display the previous largest overexpanded period at broke on the 600 to 200s version. And so if you zoom out a little bit further, let me send that link to Headshark as well after it's done loading on me. I can just explain it. Like, this is the longest overextended period that's being tracked there is the one all the way from the November crash. We have quite literally been following the ever since November the same basic range. Like, nothing's really changed with respect to any of that action on the macro time frame in 6 months. And we got our mean reversion. Somewhere like we got the second test of the bottom in early February. Where your dad shark was saying that he wanted to buy the 200 weekly MA exactly and put his bids a little bit low, and I didn't put my bids a little bit too low. We watched it get back to the retest of this larger distribution. It passed through it. Like a week later is the point where there was that run up on a Sunday and then like a 20% drop and a bigger move on Ethereum at the same time.
What day was that, Kat?
That would have been February 24th. So,
oh yeah.
Yeah. So then that dropped back to the bottom, to the middle point of the compression range on BTC. And then
that one threw me for a loop. I seriously thought we were going to get trending expansion for the mean reversion, and then it just turned into a lateral mean reversion, and then it reverted to the mean in a single goddamn candle.
Yeah. So then we saw a month-ish of more sideways action, but slowly starting to trend up. We saw a retest of the more local mean that was expanding. It never actually closed the candle across that mean, which is generally a pretty good sign for continuation in the direction it's been continuing. It broke out. I have around March 29th, and then upon touching, it started to get close to pivots again. We finally got the candle on April 2nd, which weighed close to our mean reversion level. Came back down to about 4,600. Then a second leg climbs all the way to wick the mean reversion level. There's some consolidation, but an upward trend, an inverse parabolic curve to the top. But it eventually does cross our mean reversion level. This is around the point when we're saying we're really emphasizing by now on April 10th that our target is that weekly 50 moving average, which I believe was around 5,700, 5,600 at the time. We're getting pretty close to it, and I don't remember exactly when you released the first official call that this was the level. It might have been there. It might have been a couple weeks later when we actually did hit 5,600. Probably was a couple weeks later. But around that point in early April is when Bitcoin started compressing. It was around the same time that Ethereum and major alts generally hit their tops versus USD for what would turn out to be the next month. Let me just look at the Ethereum chart for a second. So I have on Ethereum that it hit the high 180s on April 3rd, along with the hit 177 on April 3rd, along with the first Bitcoin push, and eventually peaked locally at 187.67, and that was on April 8th. So at that point, it did a sort of a lower double top formation on April 10th. It then comes down, it gets to its mean reversion level, and just dies. It has this compression pattern. It doesn't look like it first dips into the past the pivot, but bounces on the 3.2 of the local compression. It climbs back out. It retests at 170s, but it doesn't really get that far, and it just generally has low volume. It looks anemic. It looks like we've put in a top, and if you start looking at the alt BTC pattern or charts around the same time, this is when increasingly they start putting in bearish retests of trend against Bitcoin.
So here's kind of my thought process on why I thought the chart was just so bearish. We painted super obvious bullish structures, had fake breakouts, and then immediate failures afterwards. And that happened not only once, but with that same resistance level, price broke out again, faked out above the weekly 50 in the same breakout structure before huge volume red sell-off crossing the mean reversion pivots and activating bearish conditions, right? So at this time, we were expecting a full retracement to this mean, and if we had a full retracement to that mean, well, mean reversions trigger mean reversions, and we retrace all the way down to the weekly 200. So I was rather attached to one concept. Sorry, go ahead, Captain.
So it's here I'd like to point out that I think there was a moment in early April when I'm seeing Ethereum spike all the way to what is also on the daily chart. I should send you that chart because it's pretty interesting. And there's some interesting lessons to just interpreting what large compression ranges mean. But I'll pull that up for you while I talk. It has been the case since the BitMEX pair came out for Ethereum and BTC, Ethereum as a perpetual swap, that there's not been a substantial divergence in the overall direction of Ethereum and Bitcoin at the same time. This makes a certain amount of sense if you consider how the perpetual swap works, because it's actually paid out in Bitcoin for a longer term, larger market maker size whale. There's a strong incentive to make sure that they're generally going the same direction. So when I saw Ethereum struggling, and Ethereum notably has this far higher mean reversion level upwards that it could reach out to, and that it hasn't. I started seeing it repeatedly fail on this compression mean. I took that as a general sign that the market was toppy broadly, because to my mind, we should be breaking through that level on Ethereum if we're going to have a larger rally in Bitcoin, because it would just be a large divergence. Now, if you've been around the crypto world for at least mid-2017 or earlier, it's less unusual to see Ethereum and Bitcoin wildly diverge, because it used to be very common. It used to be probably the norm that one was up and one was down at any given time. And it's sort of a change that happened over the bear market that they tend to correlate much more. But like, I saw that, and I saw other major alts. Ripple's been in this ridiculous, horrific decline against Bitcoin for months. Most major alts similarly. And this is when I kind of shelved the idea that there was probably going to be any kind of larger breakout of Bitcoin. The 50 moving average on the weekly of Bitcoin did seem to be the point where everything was reversing. But even at the time, before I'd given up on that, I was looking at the containment zone on this overextended period from November and saying, if we were to run through that and Ethereum was going to go to 300, it would make a lot of sense for Bitcoin to run maybe, I think it was 71, 7200 at the time where that containment zone hit. So the chart was there. It was more all the things I've seen after the fact that I would say gave me a much more bearish bias than the chart was really the chart was justifying by the time the parabola started.
Absolutely. Yeah, for Ethereum, I agree with you. But as far as Bitcoin goes, this right here was going to be my textbook bearish reversal, right? It followed Wyckoff theory. It was very well painted to look bullish with the fake outs here. And it's kind of ironic. A few months ago, my one of two conditions for when Bitcoin is going to go into a bullish trend. Wait for one of either two things to happen. Wait for a sustained move above the weekly 50 or a retest of the weekly 200. Either of those scenarios would have been very bullish. We actually got that sustained move above the weekly 50. I just over-prioritized the strength of the downward draw of mean reversions. And one of the tenets of mean reversion trading is wait for the swing high, and one way you can do that is waiting for 1/10 periods of its CCI roll. And what didn't work about that is the second higher high. Right, up until this point, I was still in a bearish perspective. Like anything above 6,000, that's kind of when I realized it was going to go into a parabola, but there was no way to safely enter a parabolic trend. So we actually had the longest overexpanded period here as well. And we actually had two failed mean reversions in a row. That's since mean reversions hit around 90% accuracy, it was really bizarre. One second, I need to find the exact period. It's 70. Just give me a second. So not only did we have the failure of this mean reversion, we had a secondary failure of this mean reversion, despite both of these conditions being active. And then the second higher high is when we finally stopped out and said, well, wash my hands of this. I no longer have a reasonable way to predict what's going to happen.
So the other thing that I think we have to talk about is the timing and whatever it might mean about this Bitfinex story, which based on the chart, the news dropped on, I believe, April 25th, at which point there was an immediate about 10% decline in the market across Bitcoin and major alts. So it has long been the case in the crypto community that there is a lot of FUD and disinformation to move markets and long FUD people. And the problem with this one is that it's not fake. It's decidedly not fake. It's comically not fake. And I'm not sure we have a lot of experience dealing with legitimate bad news in the crypto community.
Yeah, there's so much FUD that when the actual bad news comes around and then nothing happens because of it, that's quite a bizarre scenario.
So, I mean, something did happen, which is that the market immediately did dump. And so it is a life skill in 2019 to, if you exist on the internet, to be able to sort high quality sources of information from low quality sources of information. Like, this is a friggin' New York Attorney General court filing case. Like, you can read the court filings. The New York Attorney General's office has a lot of experience specifically prosecuting financial crimes. It is an area of expertise in the state of New York. The case is galling. Like, it is really bad. The New York Attorney General's office alleges that they sent $850 million to a probable money laundering operation without signing any contract. And they did this because they apparently could not find on the entire face of planet Earth any reputable bank willing to take their business. And it's just like, there is no charitable interpretation of this scenario.
Charitable interpretation. That's like, a great wording.
Like, there's no way this isn't just objectively bad. One of the largest crypto exchanges had $850 million stolen from them because they were actively toxic to begin with and couldn't find anybody legitimate to work with them. They hid this from their customers. This is also all laid out in excruciating detail in your double-spaced, court filing public document text. They represented to the community that funds are safe, withdrawals are going normally, which they are not. They have not been sporadically for basically since that happened.
Bitfinex withdrawals are still suspended, right?
I'm not sure at the moment. I haven't checked.
Yeah.
But even when they're not suspended,
like
they keep taking forever for large withdrawals. There are all sorts of issues cropping up where they're doing stuff like opening bank accounts in the names of the people withdrawing in some countries, where they think they can get away with that, which is straight up bank fraud. The odds that if any of this pans out, that there won't be people from Bitfinex who end up with arrest warrants and extradition warrants to the U.S. to face charges, face time over this. The other thing is, like, the commentaries come from various lawyers in the crypto community about the filings Bitfinex has had in defense are just laugh out loud. They have no case, and it's obvious that they have a terrible case.
And it resulted in a bullish parabola.
Yeah.
We're kind of just caught with our pants down.
So, and this is the humbling lesson in why, regardless of what the fundamentals say, if the chart is not agreeing with your scenario, it is time to rethink whether your scenario actually makes sense as a trade. So I love the quote that the market can stay irrational longer than you can stay solvent. And the practical upshot of this Bitfinex news is that in the short term, it created a crap ton of bear liquidity. People piled over themselves to short this, particularly on BitMEX. I would shy away from reading too much into the Bitfinex longs and shorts because they do not mean what people think they mean. The size of them, the scale of them, how long they stay open, at which funding rates they're at. There are all these various factors which suggest that they're not primarily used for speculation by the average crypto investor or crypto speculator. They're probably more likely used by the market makers as hedging devices on some time frame or as long-term position accumulations. And they do different things on different time frames in different directions, and it's a total mess. But in the short term, BitMEX funding can be worth looking at. And there's a tendency in my experience to be directionally correct for a little bit and then get way out of line. And be a really early signal, sort of like a oscillator divergence that eventually the FOMO is getting real. And for like a number of days at the beginning of this parabola, the funding rate got to something like 3% daily for against the bears. It was extremely expensive to short on BitMEX, and you saw just this parabolic pattern emerge as it made sense. Almost, it was just such a wind at your back to long and eat this bearish liquidity that people started doing it, and there wasn't a wave of bears willing to pull the trigger until this had gone to really quite an extreme length. I think we finally started seeing some real chop, some large, high volume, red candles, only when we were pushing, the third standard deviation of the current expanding period. Which is to say, like, we got all the way to 7K and before bears really even started showing some strength.
Maybe this is overbought. Yeah.
So, and this is another fault I ascribe to myself here. It's just a complete failure of imagination. This kind of parabolic move on Bitcoin itself has not happened since the bull market. You could argue that a similar distance was traveled in after the 6K crash as the V pattern, or a larger distance there. But I believe this parabola now exceeds the move in April of last year. It's just, for Bitcoin to move this much this quickly is, it's a pre-bear market levels of FOMO. It's also, again, something that for the past year and a half has always been much better for alts than it was this time. So at some point, you have to learn the lesson to put aside your biases about what has happened in the past, what actually makes sense, and just say, well, this is what the chart's doing now anyway. And I kind of wish I'd done that earlier because I missed out on a big move.
Okay, but Kat, where do you think exactly on this chart that the bearish bias was canceled? Or rather, where the chart was no longer a bearish chart?
So I would say around. I have to almost go by the hour at this point. Around the beginning of May 7th is when I have the compression range finally breaking.
Yeah, I agree.
So, and I'll just note that as far as Wave PM crosses go, there wasn't really clean one on Bitcoin in particular here. There was maybe some early ones
Well,
where,
here's
but
the thing
it
about
was
wave PM crosses. They imply normal market momentum, right? If you have someone applying excessive force to the market, then of course you're going to get ridiculous expansion regardless of compression.
Well, in this case, I'd say that the issue is more that Bitcoin was very highly compressed, and it was we had a level of expansion for this parabola that was underneath another expansion. And it just wasn't really cleanly picked out by the base version of Wave PM. On 3D Wave PM, it's more apparent kind of how that was happening, and you could see this as one giant Bitcoin expansion. And you can make an argument that this is still not over, though I wouldn't be comfortable betting a lot of money on that when it's pushing the 3.2 standard deviation of the longest over expanded period.
Yeah, especially, the third standard deviation on the daily chart, when it has excessive mass, is a pretty hefty brick wall in all markets.
I'm reminded a lot of the move that happened on Ethereum right after the December crash, where the way it ended up bouncing was to do this parabola where it gained 100% in, almost 100% from the bottom in 10 days. And by the time it reached the top, it had broken nearly everybody's TA. And then it only stayed up there for, it did this one final wick up to about 160. Yeah, about 160. And then immediately started, and in a period of 3 to 4 days was all the way back down at 110. So it had gone from 80 to 160 in 10 days, dropped down to 110 3 days later. So it fully retraced 50% of that parabola in half the time it took to make the parabola. And if you're bullish on Bitcoin, that is a concern you have to have at this point, where if this parabola has hit the point where it's breaking, and the volume profile at this point does seem to support that the bears have arrived, then you should be concerned that about half this parabola can evaporate pretty quickly before it actually sees a real strong bullish bounce.
Yeah.
You probably expect at some point to retest something close to the top of this parabola again. Usually that happens in crypto. But at this point, I think you missed the move if you were hoping to long a parabola.
Yeah, the last time we had this significant of a move on Bitcoin, we saw, cause this is not even close to the same amount of expansion. That's bizarre. But anyway, actually, we just need to wait a few days to see how much this mass here will expand. But the last time we saw significant expansion on Bitcoin, it went through a compressionary period of 125 days. And, well, if we have a move of the same, close to the same percentage, right, you can expect another period of compression around the same length. And at the moment, that compressionary range, just as this downward move had upward sloping compressionary range, it's safe to assume that the compressionary range for this positive move is going to be sloped downwards. And we might see an automatic relief rally and then compression, but we'll have to wait till the actual mean reversion pivots form before we can form a solid opinion on that. Any final thoughts, Kat? What else do you want to say here?
Um. So the word of warning is that at this point, like the parabola, if you were directionally right, which we were not, if you're directionally right, trading it on the way up, it is very easy money, very easy to trade. And it is very easy. It's sort of like coming off the highway with the concept of velocitation, where you have a tendency to speed because you don't realize how fast you're going. I would warn people who caught that move that take some profits, but be careful in trading the upcoming chop because it's very easy to feel a bit like you're working like a genius at this point. So just be really careful right now because you can give up some of your gains if you overtrade the bounce.
Oh my god, yeah. I'm probably just going to sit out the entire trading Bitcoin thing until we have a defined mean inversion pivot. And then we'll have a very high probability short. At least assuming mean inversion still works. It didn't the last 2 times, so fingers crossed, right?
Yeah. And the other thing is when you see these large moves, it's tempting to call the top when you see the top and then get into shorts before you have the CCI roll downs or the really clean pivot move. Like the thing is, it takes time to work off the mass. It takes time to actually start reversing, and the chop thing goes both ways. An actual top tends to have a lot of mess before the final move. So patience is really key whenever you're at a pivot. And hey, that's a hard-earned lesson, frankly. But be patient about this structure. If you're going to trade it, make sure you're using small enough amounts of capital so that if you're just horrifically wrong, because there's a much higher chance that you just call something completely wrong in these periods, just make sure that you contain losses to a small piece of capital.
Yeah, well said, really. And if you weren't shorting but you were just in tether this time, it's important to remember that missed profit is not lost profit, right? In my Binance portfolio, I didn't lose a single dollar this month, but certainly if I had done nothing, I would have made more. And that's one of the problems with crypto is when you actually are adjusting your risk profile by tethering out, you are in fact technically in a position, and then it boils down to whether or not you want to try to maximize your USD value or your Bitcoin value. And that perspective is really going to shape the way you trade. Since I tethered out because I figured preserving my USD was more important at that time than preserving my Bitcoin value. And well, I lost a lot of potential gains. And even though there I go with that phrasing, I missed out on a lot of potential gains. I didn't lose it. My God, it's a hard habit to break, assuming that missed profits are lost profits.
I guess the other thing to say is, this speaks to why you should keep in mind there are more markets than just like this was a blown week for me or two in crypto, but man, as a bear in the stock market, it was a really good week. So
yeah, that's a great point. Thankfully, there are so many pairs to trade in crypto. If something isn't your going way, find something else that is. And for me, that was Litecoin. And thank God for Litecoin, because I made more money shorting Litecoin once than I did shorting Bitcoin. Then I lost when shorting Bitcoin 3 times in a row. So let's load up that chart. Right, we just have this huge active downtrend, and I've participated in it for the entire time. Right, that's kind of all I have to say about it, and it's still in a downtrend, and I'm still short, so fingers crossed, right? Any final words, Kat?
On this topic, no, but I'd be happy to read through the questions and see what people want to ask us about.
Sure thing. Let's see what people have to say. Not that many questions, actually. Clever comments about no press is bad press. Lucian asks, on the 4-hour chart, a recent longest overexpanded period is 350. If you load it on the wave PM, you see that it just hit the 0.7 period. I'm assuming you're talking about the compression on Bitcoin. Yeah, you want it below the 0.7 period, not above the 0.7 period, right? So that means it would have to turn green before we consider it a trend. And to be honest, the mean inversion conditions already failed because there has already been net expansion above the pivot. And, well, it's already in a state of expansion because it's above the 1.25 standard deviation. So essentially, yeah, you can definitely expect re-expansion of those longest overexpanded periods simply because we've already tagged such extremely high values for that area. And Kirby says, let's not say we tethered, we paxted. Huh. Yeah, that's funny. I don't know what Pax does, except it holds the value of USD. So if it does that, I'm happy. Any final questions, folks? I want to see what you have to say. Okay. Nothing from the looks of it. All right, folks. It has been a pleasure. Kat, bid you adieu, and I'll see you all guys tomorrow at the same time.
Thanks.
Have a good one.